profession. But I'm a bad investor. I have made many investment mistakes. Have you ever heard of anyone selling Apple stocks at the price of $85 per share? I did that. I sold it in 2009. But I've never given up on investing. I've always worked hard at it, studied hard. And I made a portfolio that includes long-term investment, which means I wouldn't make that kind of bad decision again. I would hold on to the stock for the long haul, wait for it to go up to 600. But this year, I realized something. Capital gains tax is going to go up by the end of this year from 15% to around 20%. So I did some research, and I found out that capital gains tax, it's not an effective way to increase government tax revenue. It's a little counterintuitive. So today I'm here to persuade all of you that we should cut capital gains tax for 3 reasons. Capital gains tax, by cutting it, it will actually help to increase the government's tax revenue. I will show you some study that will indicate tax revenue actually goes up when we cut the capital gains tax rates. I will also show you studies that shows that by cutting the capital gains tax, it helps to energize the economy. It helps to encourage people to take more risk and do more investment. And the third thing I found out about capital gains tax is how poorly it's designed. It's double taxation at its worst, and also it doesn't account for inflations. So in a way, they should change the name to capital gains / inflation tax. So it's bad for the government, it's bad for the economy, and it's bad for investors. Here's a plot that shows the capital gains tax and the tax revenue. In 1981, President Reagan lowered the capital gains tax, and as you can see, the red line is the tax revenue. It actually went up. This effect is even more pronounced in 1997 when President Clinton again cut the capital gains tax, and this time you can see the tax revenue also shoot up again. And this happened again in 2003 when President Bush again cut it down to 15%, and the capital gains and the tax revenue went up. So 3 previous presidents cut capital gains tax, and each time it helped our government to generate more tax income. In this chart, the only time that it was raised was in 1986 when President Reagan increased it, and you can see the red line took a dip at that point. By raising capital gains tax, it actually caused the government to generate less tax revenue. Now, why is that? This is counterintuitive. Why is that? I thought you want to generate more tax revenue, that's why you increase the tax rate. But why is it that it's the opposite effect is happening? It's because by increasing the capital gains tax, you're discouraging people from investing. You're discouraging people from selling their assets. This plot shows capital gains tax and the amount of dollars raised by the IPO firms. And as you can see, the cut in 81, in 97, and 03, each time they helped to energize the economy and attract more venture capital fund. We can also look at from a GDP point of view. You can see in 82 to 86, when the capital gain tax was cut down to 20%. For those 4 years, the average GDP growth actually went up to 3.5% from the previous 3.1%. And the same effect happened in 98 to 2000 when the rate was cut from 29 to 21%. The GDP went from 3.1 to 4.5. And the same happened in 04 to 07. The reason is because GDP is, investment is a big component of the GDP equation. You increase the investment, you increase the GDP growth. The third lesson I learned from my study on capital gains tax is it's poorly designed. It's a form of double taxation. The stock price of a company is based on the projected future earning of this company. This earning is a post-tax earning. Corporations are being taxed at 35%. And when you sell your stock, you're being taxed again at 15% for the capital gains. You think you're only being taxed for 15%, but really you're being taxed for much more because the 35% of the corporate tax rate is implicit in there. And also, it's poorly designed because it doesn't account for inflation. Suppose in 1975, you made $100 of investment. And suppose in today, 2012, suppose the true value of this investment has not gone up. But because of inflation, it's worth, the price is $337.5. Because of inflation, it's 3.375 times as of 1975. You will be taxed for that $237. That's all inflation. So, in conclusion, I hope I've changed your mind regarding capital gains tax. I know everyone is freaking out about our deficit, but I don't think by raising the capital gains tax is the way. In fact, I believe we should cut the capital gains tax because it will help to generate more tax revenue for our government. It will help to stimulate our economy, and it will encourage more investors to invest because this tax is poorly designed and it needs to go. We need to urge our lawmakers, urge Washington to cut this tax. Thank you. Questions?
How much should we cut so that we can reach a equilibrium point for the best of the economy?
I think it's a very good question. I don't have the right expertise for this. I think it's best to leave up to the economists and for them to come up with the optimal value.
I'm going to ask you to step out of your current position, just because you made such a compelling argument about the main points. I'm kind of wondering, why would anyone want to raise capital gains tax? What is the argument on the other side?
It's a good question, Cam. It's a lot of, my opinion is there's a lot of political incentives for trying to please a certain group of people on the, I don't want to specifically name which side, but there's a specific group of people that these politicians are trying to please and telling them, hey, we're increasing tax, we're taxing the rich, we're taking care of you guys, that kind of stuff. So that's my belief.
Notice that capital gains was at the tax is the lowest it's ever been,
Right.
so why should it go even lower? Are we just gonna go into a cycle where we just have to keep lowering it?
I agree. It's 15% is the lowest it has been for the past 4 years. But like I presented, the fact that it's a form of double taxation. So really, when we talk about 15%, it's not really, we're paying more than that because of the corporate gain tax that's implicit in our stock gain. So I believe we should redesign, we should lower it, and we should redesign so that it accounts for some of the deficiencies that I presented.